Hey, this is Matt from InvestiQuant. Today is Thursday, October 22nd, 2020. And once again today, we are getting a lot of headline-based trading, and the market is whipping back and forth depending on the headlines that are coming out. We started to get a breakdown this morning, which was erased by some comments coming out of Speaker Pelosi. And we have since reversed from that breakdown. The pattern's quite interesting, and when I was just testing it earlier, it kind of surprised me in the results. Just going off of my technical read, it was not nearly as strong as I would have anticipated based on my read of charts. But the pattern that we were looking at here is going to be based upon getting a breakdown, and you can't really see it here on these charts because this is just 5-minute price action for 2 days. But we had this breakdown that took out recent lows. So we opened within the prior day range. We broke down, taking out 10-day lows, and have since reversed. And we have now gone green on the day in some of the indices, 3 of the 4 indices. NASDAQ has not quite done that yet. But this is a reversal-like pattern that is developing here. And typically, you would expect, a little pullback here that continues. And I would be looking up towards, maybe 3450-ish or so as a continuation higher. But when I started running the results on this type of pattern, the results just did not leave me all that excited. So let me come in here and show you what it looks like. Let me come in here and select all 4 instruments. We're going to use an intraday time-based entry with an entry time of 3 p.m. Eastern Time. The exit, end of day, which is 4:15 p.m. Eastern Time. So this pattern, the way we're going to describe it is we opened within the prior day range. So opening filters, open in prior day range. Then I'm going to go into the post-open filters section, and I'm going to say that the low of the session was a 10-day low. So if I hit equals for less than 10-day low, that means we made a new 10-day low there on that breakdown. But after that, we bounced, and we're now trading above the open. So that creates this reversal-like action, assuming we're still trading above the open at 3 p.m. And with the headlines, who knows where we'll be. But currently, we're trading back above the open. And then lastly, I'm just going to come in here and put it above a 200-day moving average. Since it made a 10-day low, it's likely below the 10-day, so I'm not going to add that and keep as many samples as possible, then hit view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you open within the prior day range, and then after the open, you make a low that is below the most recent 10-day low. So you're testing lower, and then you pop back up above the open. This is taking place above a 200-day simple moving average. Historically, 43 samples in the S&P, 50 in the NASDAQ, 48 in the Dow, and 41 in the Russell. And if we look at the win rates on these, all of these at least a little bit weak. They're not super weak, but 44% in the S&P, 44 in the NASDAQ, 48 in the Dow, and 44 in the Russell. So 3 of the 4 coming in at 44%, which is less than what I would have expected. I would have expected this would be leaning on the long side. However, we do see the average win on these is larger than the average loss. So the win rate's a little bit lighter, but the average win is quite a bit bigger than the average loss here in the S&P. That's true in the NASDAQ. That is true in the Dow. And the Russell's more mixed, pretty similar size wins and losses there. Let's take a quick look at the results distribution. And we're looking at the S&P here. So this chart, if you haven't seen it, it is based upon the results of the trades that are included here. And on the vertical axis, we have the trade count. So a taller bar would have the higher trade counts. And then on the horizontal axis, we have 0 in the center, which is this black line. To the left of it, you've got red bars. Those reflect negative trades. So the further to the left, the bigger the negative trade. Right here in the center would be the small negative trade, small losses here. To the right of 0, we've got green bars. Those are the positive samples. So these are winning trades, and the farther to the right, the larger the trade result has been. So it looks like in this scenario, there's been a lot of smaller losses that have taken places, whereas on the winning side, it's kind of spread out. There's not really a lot of grouping taking place. There's bars that are spread out at each little interval here as you climb higher. Not giant outliers on any any side here, but the losses look like they are a little bit more on the smaller side, and the wins are a bit more spread out. And we kind of saw that in the average win, average loss there. You can see average win coming in quite a bit larger than the average loss in the S&P. But hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.